Hi guys, welcome back. So I think only less than 1% of the population know about this company, but there is a chance that you might see this everywhere in most of the countries within just 1 to 2 years. Who is that and why is that? What to do with it now? Let's get right into it. And the company is called Miniso, ticker symbol MNSO. So most of the people still don't know about this brand as it's fairly new. Some people have passed by it over the mall. Some people mix it up with Uniqlo, a Japanese lifestyle brand. Some people thought this is a Japanese company. But there is a good chance that you might know someone that have bought something from their store, if not yourself. So despite a lot of people's recognition or perception, this company is actually from China, and I think everyone can see the heavy inspiration from Japanese design or directly from the brand Uniqlo. So the founders and CEO Ye Guofu started this company 7 years ago, and headquarters is in Guangzhou, China. And now Miniso has opened more than 4,200 stores in over 80 countries, including the US, UK, Canada, Australia, Spain, UAE, India, and Mexico. And the position of the company is a retailer delivering fun, high-quality new goods. They believe a better life has nothing to do with the price. So, in other words, they offer affordable, high-quality, and joyful design items for your home, for your travelings, and other everyday use. Miniso has been growing very fast in China and out of China. Before the COVID, you can almost see their new store opening at almost every new shopping center. Outside of China, they have been also expanding at a fast rate. I think they're doing exceptional in South Asia, especially India, as well as Europe. I saw that one of the new stores open in Europe, I believe it's Germany. The first day of opening had broken the sales record. Now, if we say that less than 99% of people know about the true identity of Miniso, then maybe even less people truly know about the real business model of Miniso, which is how they make money. And this is said by the CEO. So in short summary, they have done the calculation to open a new store. The startup cost, including everything, it's around 2 million RMB. And in order to lower the difficulty to make it more accessible, they have divided this one-time cost in half. So if anyone is interested to join a franchise and open the store, they just need to take out 1 million, and the other 1 million would be offered as a loan by Miniso. And in this way, they would get the majority of the cut from the profit of each store goes to Miniso, the company. So only about a third goes to the franchise store owner. In this way, this small business owner have more accessibility by lowering the startup cost, and also more carefree because Miniso would take care of most of the operation of the stores. So it's almost like this is all you need to start a business and continue to have regular stream of income from your cut and less trouble. No need for knowledge to run the brand and management. And for Miniso, they can get a bigger cut from the revenue of every store, and also they get to enjoy a much faster growth rate, faster expansion of stores by lowering the difficulty. They can maintain the brand image by having central management to ensure the sustainability of the brand growth. And at the end of the day, it is almost zero risk for them, as it seems like most of the risk is being carried by the store owner. They would most likely get back the loan anyways. So, why should we pay attention to Miniso now? For this, we have to take a look at the 08-09 again. It was at that time also during the financial crisis of the US, the Fed had started to print massive amounts of money to save the economy. At that time, inflation was also a big problem, which resulted in buying less items with the same amount of money, right? And because of people's income cannot catch up with the inflation rate. So this would result in the level of happiness going down. At that time, the smart entrepreneurs took the chance to grow fast. The dollar store. At that time, the growth of dollar stores expansion was really like a boom. So now back to the present time. everything is going the same with the same story, except it's different time. Right now, the youth is the millennial, and they clearly want different things. They want to maintain the same level of happiness. On top of that, they want something fun. Fun is very, very important for the millennials. Other than that, they want the look. The design needs to be good, and finally, the quality needs to be not that bad. So obviously, the dollar store business model does not fit their demand. And here is what the new retailer like Miniso can fill in the gap. They need affordable design items that can give them the level of happiness while, more importantly, it is fun to shop. So this is one reason for the rising inflation. And there's another big reason, big trend, which is the giant trend of e-commerce coming to the whole entire world. China, it is much more advanced in the e-commerce field. It has been penetrated as the everyday shopping behavior for everyday people. So the offline retailers were first to take the big hit in China. So we can just see the trend of e-commerce and how it affects the retail market, learning from China experience. And what happened to China was that a lot of the retailers were closed offline and moved to online. The composition of the shopping centers. Retails are shrinking in general, and what's increasing would be the proportion of restaurant, supermarket, movie theater, and some other service. But there is an exception for Miniso, or retailers like Miniso, that have been actually growing in despite of the growth of e-commerce. And why is that? I think it's mostly because it offers a fun, happy, joyful, affordable experience that you cannot replace with online shopping. The joy of finding out new surprises, the surprise to see the newest toys from your favorite Disney character. And this is just not something you can find the same at all through online shopping experience. On top of that, e-commerce replaced offline retailers in China fast, and the biggest reason at first was because of the price. It was much cheaper than offline retailers because they cut down the middlemen, the distributors. And for Miniso, it's not a problem. It's something everyone can afford anyways. So we have seen this growth story and the exception for Miniso expanding fast in China. And now the question is, would Miniso be able to expand or copy this model on how they grow in China overseas to other countries in the world? And I'm leaning towards yes. Ever since the COVID, the lockdown, e-commerce has been growing very fast in the West, in Europe, in South Asia, hitting a lot of the shopping centers, the offline retailers, just like what happened for the last decade in China. So there is one opportunity for Miniso. Also, with the inflation issue in the whole world, we need something like this to boost the happiness in shopping. This is the natural demand. I recently visited a few shopping centers in Canada, and I'm starting to see more and more Miniso stores. In general, I think the amount of traffic throughout all stores are cut by at least half, if not more. But I also see more people shopping in the Miniso store more than the others. So in general, it's not good, but Miniso seems to be making least of the devil. The CEO had made a quite ambitious plan to have 10,000 stores in 100 countries, reaching 100 billion revenue. And this should be achieved by the end of next year, 2022. So we'll have to see whether he needs to modify this goal due to the COVID. How would they able to achieve this other than the business model idea I just talked about and the trend I expect coming up? I think it's worth mentioning the CEO or the management team. I think their strength is their business mind and the operational skill. Strong operational skill helps them control the cost to be precise and minimal, and to keep a very fast turnover rate, low inventory. And this is very important for the retail industry. Similar strength I see in Xiaomi's CEO and the current CEO of Apple. I think they are the type of CEO to have crazy strong operational skills. And also the current CEO of Luckin Coffee, operational background and talent. He once said that his secret sauce to control the cost to the minimal and fast production period is to have all the time very large order, very large quantity, and pay upfront with cash. Something that every supplier would dream about, and in return he would ask for very low margin rate from this supplier. I have another observation from one of my clients. They are a brand of drinking bottle who happened to also supply to Miniso. And he told us that Miniso is making it very, very difficult for brands like them to grow. So here you can see the core strength and advantage of Miniso's business model. Now let's talk a little bit about the valuation. Current market cap is 5 billion. On CNN, you can see the analyst price target is average 21.5, ranging from 19 to 22, representing an upside of 30%. I think because Miniso is not very popular stock, that's why it doesn't receive much of analyst or institutional coverage. But what's more crazy is on MarketWatch, the analyst price target is average 134, ranging from the low of 121 to the high of 144. So, do you think this is a mistake from the website or the analyst? Now, let's do a little math on our own. According to the vision of revenue, 100 billion RMB by 2022. This would be around 15.5 billion US dollar if we consider this to be a growth company that doesn't make profit yet. And we give a general PS ratio of 3, which is pretty normal for retail. So this would give us the market cap of 46.6 billion. Compare this with the current market cap. This would represent a 9.3x from here. And right now the share price is sitting at 16. So 9 times 16 equals 144. Hey, this happens to be the upper range for the price target. Now, if we consider Miniso a value company for value investing, we think that this company should get a steady growth from now on, slow but steady, just like the general rate of retail industry. And I assume they would get a net profit rate of 5% over the time. Then this would give them of 0.78 billion. And we give it a normal PE ratio for value investment of 20. Then we should get a market cap of around 15.5 billion. And compared to the market cap right now, it would result in the growth of 3x. So around 45 for a share price. Depends on which way we give the valuation, considering it a growth stock or value stocks. The fair value for the share price would vary from 45 to 144, approximately, given the fact that he can achieve this goal of revenue by next year. Another article that made me more bullish on Miniso was this one, that Miniso is planning to double the amount of stores in US in this year because they are really taking advantage of the hit of the COVID attack for the retail industry, for the rent to be significantly reduced in the shopping centers. So this seems to be very bold move, very confident, taking a very big bet, a very smart risk, I would say. Kind of a win big or go home. Counter the rainy days of the industry. Okay, that is for the opportunity. Now, let's also address some of the risk here. First, obviously, COVID is still an unsure factor of how long and how much it should affect the offline retail. 2. Political risk. Would it affect Chinese business overseas with the current Chinese foreign affairs? And especially the US and China relationship, would it continue to make China increase the export tax? Because that would affect the margin rate for Miniso. Then there is the share structure. Right now, the shares are very concentrated to just a few. The founder and CEO only himself already takes up the majority, which is 72% of the total shares. It could be good, it could be bad. Good in a way that he takes this company very seriously. He did not take advantage of the IPO and sell a large chunk of his shares to cash out. Decision can be made fast because power is concentrated. At the same time, it could be bad because one person's decision can be everything for the company. And last, it is not one of the industry that's strongly encouraged by the CCP, by the Chinese government, because it is not one of the new technology the country is developing, encouraging. But it does align with the brand export trend, I think. But that's about all of I can think of. So there is no guarantee that it won't under regulation from the government in the future. So these would be the risks you need to keep in mind. Now at last, we'll move on to the chart. So I have started to buy Miniso at the 13 range right after I make my video in near the end of August to predict that Miniso had made the bottom. And after that, we have seen a slow but steady reversal. I also pointed out in the Discord and the videos a few times that Miniso is trying to break this downward trend. The company's IPO was last year in October, around 20. After that, we know that this year the Chinese stocks got very much attacked by politics and potential threat of regulation, fear of CCP, and I think Miniso just got a double hit in Q3 because of not only the fall of Chinese stocks after what happened to DD and TAL, but also the Delta virus affecting sales and supply chain. It was especially hitting hard India market, and we just seen that India is quite important market for Miniso. So I think that's why it got a double hit. Another one is the sudden export tax that the government is giving. For a lot of the brands that do export, it's quite a bad news. So I got hit also by that. Okay, maybe triple hit. So these have been the black swan for Miniso that drive it down crashing like this. Last quarter, I reviewed with you the Hill House Capital's portfolio, and they have increased their position of Miniso by 1,500% during the Q2. So I think that's probably why we saw those days with the sudden spike of volume. So here we can tell that Hill House Capital had bought in most heavily in the range between 20 to 27 in the Q2, and they should have started the position before at the cost between 20 to 35. So I think it is definitely a good deal to be able to buy all the shares much cheaper than the large institutions. You can see their cost average range at 18. They mostly hold small positions here. Morgan Stanley has 1.2 million shares. Canada Pension Plan, 13 million. And Vanguard Group, 2.3 million. Same group that invests in EH heavily in early February. Carmanac, 5.1 million. So even right now, it is still much cheaper than their cost. Seems like institutions are getting more bullish in Miniso. And as I've said a few times, I think right now it's not getting so much attention from retail investors. Every time after I mention it, I talk about it, I don't get much response or questions asking for Miniso. So I think the recent run up was mainly driven by institutions. They might be slowly accumulating, quietly buying the shares to average down, establishing more position. Last time I said this observation about the company, remember it was for JKS. I said I re-enter JKS in May, and every time I talk about it in the Discord and videos, it didn't get much love, so I was convinced that this run up was mainly driven by institutions, and we saw what happened after that. Today we have another potential breakout. Has more than doubled since then. So the fact that it doesn't get much love from retail community might be a good sign here. It is reporting earning on Thursday before market open. So if the earning is good, then it might be a catalyst to help the share price finally break through this 120 MA resistance, which it had been trying to push through for 1.5 months already, around 16.7. But if the earning is very bad, then we might potentially see it backtesting this purple trend line again around 14 range, or even driving it down to make a double bottom. That would be the 11 to 13 range, depending on the earning. Now that's it for this company analysis. Let me know what you think about Miniso, whether it is a good investment in your opinion. Now, if you have enjoyed this video, please give me a big like and write me a great comment, and I'll see you in the next video. That's it, guys. Hope you can find my videos helpful. Make sure you subscribe to my channel and give me a big like. Thank you.